just want access to the market without really experiencing a large degree of slippage. What our roadmap is about this year is we'll be launching an asset exchange, custody service, and also a merchant bank service at BitStocks, which all will be released and ready by the end of this year. So BitStocks really does try to encompass the mantra and the ethos as to what cryptocurrencies are about, and at its very core, that is sovereignty, and really what it means to be sovereign. Our whole business model is geared around helping individuals achieve and understand the importance on sovereignty. And that's not something that I would argue this to the hills that you can achieve within the traditional economic financial system due to the centralization aspect of acquiring wealth in the traditional structure. So that really is fundamentally what BitStocks is about. It's so much more than just investing. It's not just ideological. This is very, very, very much a complete different paradigm shift to how society will be run moving forward. And it does transcend money. Money is just an application. And that's one of the things that, as a BitStocks client, you will come to understand and learn that the value derived from cryptocurrencies transcends just the transference of basic value and basic cash. There's so much more to it than that. Thank you.
Okay, thank you, Michael. Much appreciate that. If we can hand over to George McDonough from Kryptonite One.
Right. I've probably got a few slides, and probably a few too many of them. But yeah, no, if I just stand here, if everyone can hear me, I'll just do a brief overview of KR1 and then what my thoughts are about investing in cryptocurrency. KR1 was the first token investment company in the world. We started in early 2016 buying ICO tokens. We're also the only listed token investment company in the world. So we're on a stock exchange called the NEX. The idea is that you buy the share, we buy the tokens. If we buy the tokens properly, the share will go up in value. If we don't, they'll go down. And then you can give those shares back to the market depending on when you come in. So we have the longest track record of successful ICO investment. And like I say, the public share is available on the NEX. So this was one of my favorite memes. You can't be in cryptocurrency and not get into memes, by the way. Memes are a central part of this ecosystem. So yeah, I love this one because this is what it looks like when no one knows what you're talking about, and that's what it looks like when Bitcoin gets to 10K. Anyway, so this is what I see as happening at the moment. The mainstream media and mainstream investors are right here at the top of the funnel, and they're basically just looking at Bitcoin and looking at Bitcoin's price. And when you read the mainstream articles, it's all about, it's going up, it's a bubble, and then it's coming down, and everyone's basically saying, I told you so. Down here are the tech community and the early adopters. And what these guys are doing is they're taking part in the ICOs. So they're trying to work out what is going to move up the funnel. So we have Bitcoin and Ethereum, and then all these other projects further down, and the money eventually hits Bitcoin, hits Ethereum, and then begins to come down this funnel to speculate on some of the other tokens. And that seems to me currently to be the state of play. And I think as time goes on and as the exchanges get better, what we'll see is you'll be able to go from fiat straight into lower down in this stack, which will make Bitcoin of slightly less importance in terms of actually getting into the ecosystem. But we'll see. That's currently where I think the thinking is. This has got way too much writing on, which I'm going to leave. Generally speaking, the outlook for me so far is more money entering the system, more technology coming to market, more adoption, more reasons to dig as deep as possible. And this is, if I can leave you with one thing today, the thing to do is ignore any project that has paid for any serious mass marketing. If you're sitting on YouTube and you're watching, I don't know, a Pink Floyd solo or something, and the first thing that pops up is a coin, I'd be very wary of that. The projects that are really worth looking at are on the forums. Dig as deep as possible and follow the developers. Because if you can get a Twitter feed of all the best developers in the space and listen to what they're saying and what they're excited about, those are the people to look at. So basically try and take as much noise out as possible. So what else? In the OPEC, credibility is everything. Aim for foundational lower stack projects on which other stuff will be built on. This is mostly in the Ethereum space, not so much Bitcoin. And then, as ever, like in everything, ask yourself, is the team incredible? So those are my sort of main things I'd say. Thank you very much.
Thank you, George. So if you can hand over now to David Powell from Gbx.
So, first of all, I want to thank the organizers from the event, Simon, for inviting me here today. I've already heard the comment about financial education, and I totally share that concept. It's very important to be educated around the way one manages their financings. My name is David Powell, as has already been mentioned, and I've worked in the traditional financial services sectors for over 30 years. And during the last months, I've become very involved in the crypto space because several of my colleagues from my previous life invited me into our project. And the name of our company is Gbx Inc. We're a US-based company, we're an early stage company, and we'll be launching a security token offering during the next few days. So it's very important I say a security token offering and not an ICO, and that's something I'm going to talk about in my presentation. But going back to my 30 years in the traditional financial services sector, I spend much of my time working in the emerging markets, specifically in Latin America. And during my time there, I saw markets information. I saw products information. I saw ecosystem, the way the way pension funds were being managed, assets under management were being formed, the way they were being formed under the regulatory framework, and the way that consumers and governments and businesses approach them. And I see a lot of similarities between what's going on in the crypto space to the emerging markets that I lived during the past 20 years. Also, part of my career I spent more recently in the United States, working in New York and also working in a mid-sized US regional bank. And most of my time, once I returned to the US from Latin America during the last 6 years, give or take, was spent working through regulatory problems. And it was a crash course on US regulation when I came back to the US. So for me, that was a very good lead-in to this space, because without a doubt, the crypto investment space, the crypto asset space, if you want to call it that, digital assets, is something that has begun and I'm convinced will not be stopped. We're going to see a lot of volatility, we're going to see a lot of movement in the market, but it's something that will continue to grow. What I cannot predict is the velocity of growth. If it's going to start and stop, we're going to have ups and downs, just as you do in other more traditional emerging markets that I've witnessed. And so by drawing on my experience in the traditional financial services sector, I joined up with 6 other individuals that also have similar type of backgrounds, and what we're doing is building a new cryptocurrency exchange that our intention is to go live in 4th quarter of this year, as well as building a security token trading platform, all US compliant, that will go live at the beginning. Our intention is to go live at the beginning of next year. Now, it's very important to say that there are a lot of challenges around getting those businesses started because of regulation. And I'll talk about that, and as I look at the agenda today, I see a lot of the speakers are going to talk about regulation. And I want to make this statement because I've talked to a lot of people. I've met a lot of brilliant people during the last months as I travel around into audiences like this, businessmen, really brilliant minds around technology. And I have one basic message, is that if one wants to construct a viable long-term business in any given jurisdiction or country or in multiple countries, you have to understand the local framework and regulatory system. Now, this is pretty obvious to me, and I think it should be pretty obvious to most people, but there's still a lot of debate around how to work with regulators in different countries. So my presentation is going to come from more of a US-based point of view than other countries, because that's where I'm working on our business. So I've been asked to talk about the 3 primary types of coins, and well, if you could go back to the other slide. And so I'm going to talk about cryptocurrencies, I'm going to talk about utility tokens, and I'm going to talk about security tokens. And as a lead into that subject, I want to mention that this week I had the opportunity, when I flew in earlier this week into London, to attend a panel discussion that was being sponsored by one of the largest European banks and is being moderated by a representative from the larger, more established financial journals, if you want to call it that. And I found the panel discussion very interesting because I heard absolutely no discussion of utility tokens and security tokens. They weren't really able to get past the topic of cryptocurrency and Bitcoin primarily. And of the 150 people that are in the room, most people, I'm convinced, from the way they are dressed and talking to some of them, were from the traditional financial services sector. I found a very superficial knowledge in general, and the individuals, including an individual, a gentleman on the panel who was very knowledgeable, I didn't see him step forward and talk in depth about what's happening in the sector because I did perceive a negativity there toward the crypto space. So there was a lack of education, a lack of awareness of really what's going on in this space. And I think that's very relevant for all of us here because without a doubt, when I look at, for example, security tokens, it is highly likely going to disrupt an important part of the capital markets, the way capital is formed. So it's important we really are able to differentiate between the three types of coins or tokens. So I'm going to start with cryptocurrencies. Well, before I do that, I also want to go back to who are the primary stakeholders. And a lot of this is very basic, so I appreciate the patience from those of you that are already very aware of this, but it's necessary to construct the foundation of my talk. The three primary stakeholders in the crypto space are investors, individual consumers, as well as institutional money. Also, too, there are issuers, companies, groups of management, startups that want to raise capital so they can build their projects, and three, the regulators. All three of those stakeholders have an important role to play, and they have to work together. And that's what we're seeing is a formation of way those three stakeholders work together efficiently. And we're not there yet, but it's something that's happening. Also, too, about the regulators, they have three primary mandates, if you want to call them that, at least in the US market and probably in most markets. One is to promote efficient markets, two, to protect investors, and three, to facilitate the formation of capital. So there's a lot of discussion around what role they should play. I think it's pretty clear what role they should play. So now I'm going to talk very briefly about cryptocurrency or digital currencies. The ones that most easily come to mind are Bitcoin and Ether. There's several others, Litecoin, Bitcoin Cash, and so forth. I think that for the purposes of this talk, what I want to focus on are two basic definitions that you'll find if you Google it or look it up in a traditional dictionary. The first definition is that a currency is a medium of exchange for goods and services. That's very easy to understand, and that's the way we use our own local currencies wherever we live. The second common definition is defined as a currency as a system of money that is in general used in a particular country. Now that's where cryptocurrencies begin to face challenges because when you talk about a particular country, no particular country was behind the issuance of a cryptocurrency to date, or at least that I'm aware of, or any meaningful cryptocurrencies such as Bitcoin. It's not. So governments and regulators are struggling to catch up with what is a reality. Also, too, Bitcoin today, while it is beginning to enter the mainstream as a means of exchanging goods to pay for goods and services, is not firmly embedded in the mainstream economy. That's what a lot of people are working on today to make happen. And I think we will see that, some cryptocurrency in the future doing that. So that is the basic definition of a cryptocurrency. And a lot of people in the mainstream economy cannot even go beyond a cryptocurrency concept to think about what comes next, which are utility tokens and security tokens. Utility tokens, I don't want to spend a lot of time talking about that either here today. Recently, I was asked to talk with a small group of high schoolers. And one of them asked me, what is a utility token? And I said, well, basically, if you go to a video arcade, there's various of those around where I was talking about, and you buy a token, you pay money, dollars for a token, and then you go play in the ecosystem of that arcade, and you may or may not win a prize. Well, what you basically did was buy a utility token. And the utility of that is play within that ecosystem of the arcade, have fun, have entertainment, but you are not receiving those tokens. They're not being distributed with a profit motive. The utility is to play those games, and you're not seeking economic profit. There's other differences between a utility token and a security token, but for me, that is one of the primary drivers to understand the difference between the two. And there's a lot of legal jargon and technicalities that I could get into, But that is the way I would explain it to those individuals, and they understood that. In terms of the US, there are few, if any, utility tokens from the US regulators' point of view. I don't make that definition. The regulators make that definition. And for the SEC, Jay Clayton came right out and said it recently. Most of you that follow this in the press have seen that he's never actually seen a utility token, and that all the ICOs that he's seen are actually security tokens. So I don't want to go down the negative path, but we will continue to see actions by the US regulators within the US market that are going to be analyzing a lot of the ICOs that have done to see if they were done properly or not. And I'm sure that a lot of them were not done properly under local regulation. Then you can go outside the US to offshore markets where utility tokens are more widely accepted and being worked with, and each local jurisdiction will decide on how they approach that. So with that, I want to move to security tokens. And what was really interesting for me in that panel discussion sponsored by that very large European bank this week is there was zero mention of security tokens. And I stood up and asked the question, what do you all think about security tokens, and what role do you think they're going to play in the future, short and long term, in the capital markets? I received zero response. It was like they didn't know what I was talking about. So I want to end my presentation here so we can move on and hear the rest of the panel participants to talk about security tokens from the standpoint is it is being used today as a financial instrument in the US market, specifically under Reg D, Reg S, that is permitted under US regulation for startup companies, early stage companies to raise capital. Telegram, even though I don't know in detail that issue, I do understand that they issued under Reg D. And so if you issue under Reg D and you work with legal counsel that knows what they're talking about and get the right advisors, you can raise capital in a regulatory, legal, compliant fashion. We're at the beginning of this process, and I am very confident that several years out, it is going to be very common for us to see companies of different sizes raising capital. And I know that some of my participants, my colleagues here, share that point of view. Also, too, you're going to see security tokens monetizing different types of assets. I live and work and base my company out of Houston, Texas. A lot of people are already approaching us to monetize through the tokenization, monetize mineral rights, specifically oil and gas. I'm sure that that is something that we're going to see in the not too distant future. It's going to take a lot of work, and there's going to be a lot of volatility, but security tokens do represent a viable way for companies to raise capital. But you need to do it right, because some of the people, management groups that have brilliant ideas and good, viable business ideas that raise capital violating the security laws of their country, specifically in the US, are going to probably spend the next several years trying to work through those security violations instead of being able to focus on their businesses. And that's unfortunate. That's unfortunate. But I guess that's part of what it means to be in an emerging market class. There's a lot of confusion. There's people that are doing things the wrong way, not necessarily because of ill intent, but because they didn't know. The regulators in a certain part have not been clear to date, some of them in the US market, about where they stand and how to apply regulation. But as things get sorted out, we will see security tokens being a very important part of the capital markets going forward. So with that, I'll end my conclusion, and thank you all very much.
Thank you, George. David. So I'll hand over now to Linda Leaney, the CFO of Globcoin.
Hello, everyone. Sorry, that's a bit loud. And welcome today. I appreciate that about half the people here have no previous knowledge of cryptocurrency. So I'm going to keep this short and sweet, and then I'm sure there's going to be quite a lot of questions. My background is I worked for 20 years in normal financial markets. My background is I'm an investment banker. I've worked at UBS and JP Morgan, specifically in currency. I'm now moving from the fiat currency world into the digital currency world, into the crypto world. So I'm taking the experience that I've had looking at lots of fiat currencies and taking that into this new sphere. I didn't know anything about cryptocurrencies 2 years ago, and so if you're coming from that base, don't worry. Utility tokens and security tokens, as have just been mentioned, are two different ways of splitting up the whole crypto world. The way I would explain utility tokens, as you've said, is the fact that imagine you're a member of Amazon Prime, or imagine you've got air miles. They're both utility tokens in a way, because they're letting you access a product. With the air miles, you can get an air ticket. With Amazon Prime, you're getting exclusive access or quicker service or something better than a normal Amazon customer. So if you're worried about how do I work out what a utility token is, think of Amazon Prime or air miles, as well as gaming tokens is a good way to think of it. What I'm doing is Globcoin is bringing stable coins to the next level. This is a topic we're going to come back to, is the volatility of markets. So one part of the whole crypto sphere has to be some kind of hedging mechanism, some kind of insurance policy that you have. In traditional assets, most people will try and hedge them. If you've got a house as an asset, you'll have an insurance policy. So stable coins is an area of the crypto world which is almost like your insurance policy. It's one way to think of it. We have launched, we have done our own ICO, so I've got a lot of experience about that. We've done our own crowd sale. We now have our token listed, and we're moving on with our timeline to actually create our stable coins. For the more experienced crypto people in the room, basically, you'll understand there's a lot of issues around tether. It needs a new form of tether out there, as well as different other currency baskets. That's what I'm doing. Thank you.
Thank you very much, Linda. So what I'll do now is we'll go on to have a debate-style set of questions. We'll take questions from the audience. I'll ask a couple of questions. One of the things I'm really, really excited about here is that we have such a fantastic panel of people. Basically, they come from the investing background, they come from the ICO background, they've worked out how to find really, really good ICOs, they've worked out how to find really, really good investments in cryptocurrency. You've got people who are in the from the regulatory background and understand the traditional financial markets and are now coming into cryptocurrency. And I think this panel almost defines what's going to happen in the future for cryptocurrency in terms of investing. It's much more about what's going to happen with regulation, how are we going to bring the traditional markets, which a lot of you people represent, into cryptocurrency, and how are we going to be able to take advantage of the opportunities in the cryptocurrency markets. So this is a fantastic panel to ask questions to of those sort. So what I'll be doing in about 2 or 3 minutes is going around the audience and asking if you want to ask any questions. Think of ones along those lines. Please try to sort of leverage their experience and understanding, because I think we've got a great opportunity here to find some great information out. I would like to kick off the questions, however, if that's all right with everyone. And what I want to ask is, from a basic level, you guys are going into a lot of detail, it's really, really good, but sort of bringing it back into a basic investment level. We've seen this massive drop in the cryptocurrency markets. We see a massive correlation between the altcoin prices and the Bitcoin price. So it's a kind of twofold question. The first one is, have we seen the bottom? And what are your thoughts on that? And then if we haven't, what would you do to hedge against that if you get the call wrong? And then the other side is kind of, do we think the altcoins are going to disconnect from the Bitcoin price in the near future, or is that happening now? So we could start off with David.
So if I understood, the last part of your question is, do we believe that deal coins or ICO or coins that came from ICOs is going to decouple from Bitcoin? Is that correct?
The correlation in price. So at the moment, we see a very strong correlation between altcoin prices and the Bitcoin price.
Sure.
And then kind of, do you think the bottom is in yet, or?
Sure. So the way I'll approach that question is that I cannot predict the direction of prices for Bitcoin, just like I cannot predict the direction of the NASDAQ or New York Stock Exchange, which are equity instruments. I have certain opinions about that, but I can't predict that with any degree of accuracy. What I would say is that with altcoins, which in large part, going back to the security token concept, in general, when you buy a security token, you should be buying, investing in the underlying business, the company. So if you want to make money and do well, get a return on that investment, in general, you should approach it from looking at that business. Will it be successful or not? And when I go further into the analysis of security tokens, again, from the US market point of view, if you issue under Reg D, you typically have to be an accredited investor and be willing to hold on that security token for 1 year or more. So that means you need to be a long-term investor. So I would really think about it in terms of analyzing the underlying business and the underlying management team to take a stab at where prices are going to go for altcoins that are associated with legitimate businesses. And I think one of the other panelists already mentioned that.
Thank you, thank you. Can we move along?
Yes.
Michael?
So in relation to have we approached the bottom, this is the big conversation that's happening right now, internally within BitStocks, externally within the cryptocurrency space. I think we got close to the bottom, but I would not be surprised to see another 20%, 30% blow off in value. It almost, since the introduction of the futures market within Bitcoin, it's added a dynamic to the market that we didn't have before. There's actually a couple of things due to the futures market which I'm a little bit concerned about when it comes to Bitcoin and as a consequence, the cryptocurrency market. My concerns are very much short term, so don't worry too much. Is that what the true genius of Bitcoin actually isn't its recipe of cryptographic technology and technology like BitTorrent and combining that together, making this beautiful cake. The genius is how that cake is secured and what has allowed that recipe to thrive. And that is how the Bitcoin ecosystem organizes organics. As human beings, we are incredibly diverse individuals. We have different religious beliefs, political beliefs. We come from different forms of backgrounds, whether you're in Afghanistan or whether you're in America. The one thing that we can all agree on, whether you're rich or whether you're poor, whether you like it or you're not, the one thing that we can all agree on is that you need money to buy bread and eggs. It is the lubricant of society, currency. So what Bitcoin has actually done is that it has uniformed that, organized human beings' desire to profiteer, ultimately greed, commoditized it and converted it into a security model. That is what has enabled the Bitcoin network over its 9-year existence. That's what's enabled the network to thrive and grow to a level that there isn't any computational power on this planet that can rival it. Now, the reason why that is that because irrespective of what our backgrounds are, no one is willing to set fire to their own wallet. What secures the Bitcoin network, and the reason why there's actors all around the world building these huge data centers, these mining operations, I believe there's a mining company just on the other side of that board there. The reason why people out there are doing this and performing this function is because they are getting paid in the very currency in which it is that they are protecting. Therefore, it only makes economic sense to play by the rules as opposed to break the rules. Now, the reason why this is important in order to answer your question is that in the introduction of the futures market, it added a new dynamic where it became theoretically profitable to break those rules. Because you can now, as the future market matures, take very large short options against Bitcoin. When we knew that the futures market was coming into existence, I actually had one of my analysts dedicated towards monitoring the hash rate on the Bitcoin network in correlation with the introduction of the futures. Since the introduction of the futures market, the hash rate on Bitcoin has doubled. In fact, it has more than doubled. The theory is that potentially what you could have is an amalgamation of hashing power, which for the most part right now is playing by the rules in order to earn their investment back. And then you could eventually hit this equilibrium point where it could actually now be profitable to take a short option and then launch an attack on the Bitcoin network. And we've seen the hash rate essentially correlate with that theory. Not necessarily saying that it's going to happen, but it's interesting to watch these different types of metrics and how futures are influencing the market in more dynamics than the obvious. Also, in combination with the futures market, this is when we had the huge blow-off in value as well, and the fact that futures market are being cash settled. So we had introduction of futures. We also then had almost what seemed like a uniformed onslaught from regulators all around the world being perpetuated through mainstream media as to don't invest in this, cryptocurrencies are bad, and this has created a lot of fear and uncertainty within the market. And I believe it's yourself who's talking about the different components as to what a market is comprised of. And this is why education is so important. It's because if the individuals who are participating within this market do not have the adequate education to understand the underlying technology as to what makes this technology so powerful, therefore what makes it so valuable, it's very easy for the institutional players and the retail investors to really shake the market and really get that confidence to such a low point where the institutional miners can run around and pick up the low-hanging fruit. And we see a lot of that happening within this space right now, which is why I started with my introduction by saying the best thing that we can do is use this almost quiet period in cryptocurrencies to really educate yourself. And when you see these types of prices, this is like January sales that's been held out for about 4 months, right? If you really, really understand what's going on within cryptocurrency. So I'll say we're relatively close to the bottom. I wouldn't be surprised if we have another 20, 30% blow off. But even if we do, if you really put in the effort to understand the underlying technology, another 20%, 30% blow off, and you got involved today, it doesn't matter. You have to really broaden out your time horizon as to what you think this technology is actually going to do and where you actually believe the prices are going to go. Second part of your question is the correlation between Bitcoin and altcoins. Now, the trajectory in which Bitcoin is going in is one to simulate a store of value. Fundamentally, and it pains me to say this, I don't agree with the development path of where Bitcoin is going right now. To simulate the notion that it's going to be a store of value and utility isn't necessarily as important, I believe is fundamentally broken. So as a result of that, we've seen the network transactions on the Bitcoin network grow exponentially. There was a day I remember profoundly, and I'll never forget, at BitStocks, where we paid in excess of $1,000 for one transaction on the Bitcoin network. I began my journey of Bitcoin where I could have sent $1 to every single person in this room, and by the time it reached the last person, you'll still have about 99 cents, right? So the Bitcoin network moved away from what it was set up to do, to be a means of transferring value for nominal, if not any, form of fee. And as we saw that fall away, we saw the rise of altcoins essentially as secondary goods. In the same way that if you went to your supermarket and your favorite tea brand is Tetley, and every single time you go to the supermarket, there ain't no bloody Tetley there, what are you going to do? You go buy Tesco's brand. You'll buy a secondary product in order to fulfill that market, that gap that was left from what it is that predominantly is what your preference is. And we see that happening with the altcoin space. The question is that how long can these altcoins actually sustain that type of image as a secondary good? And is there actually genuine utility being built on top of these altcoins? Because unless we're actually using these products for what they're designed to be, for utility, as a means of exchange, unless there's real, genuine transactions happening on this, and it isn't just a fancy, glorious advertisement by an ICO with all of this nice branding, we have to look at what is actually happening underneath the hood. And we can see with projects like Bitcoin Cash, where there's genuine utility being built on that project, where they're going and they're attacking the merchant market, they're going for adoption. There are other projects as well, like Dash, they've got a very corporate-driven structure, which is going for that market as well. And that's where you can see the potential uprising of altcoins, which will really supersede what I see a very vulnerable position with Bitcoin being number one due to its development path.
Thank you very much. Pass over to George.
Okay, well, I agree with a lot of that. My world is very much in the altcoin space / utility token space. And what I see in terms of, to answer the second question first, I believe that these utility token projects will begin to switch on, and they will, the cogs will begin to grind underneath as people interact with these smart contract platforms. And when that happens, you'll be able to actually get data on how much they're being used, what the volumes are. And at that point, I think the price of those projects is going to stabilize, and they're going to become uncorrelated to Bitcoin if it happens en masse. At the moment, there's very little that's actually working. I'm talking mostly about the Ethereum smart contract platform, but there are others. And the sort of the Bitcoin as a currency, Ethereum as a smart contract platform is something that has split the space to some degree into these different areas. And so I'd say that I think there will be a decoupling, and I don't think it's too far off in the future. I'd point towards some of the very earliest projects in the space are now beginning to switch on. I'd recommend everyone going to having a look at Maker, which is a stable coin project. I recommend everyone having a look at Gbx. Everyone have a look at Augur. These are some of the very early projects that have tokens out on the market that have very, very well loaded GitHubs with lots of code, and they have lots of community support around them. So I'd look to the projects like that as being the first things that really begin to switch on. And at that point, I think you'll be able to see some of these token values actually stabilize as people actually see the volumes of use coming into the space. In terms of Bitcoin and its price, I have quite an optimistic view of the future, in the sense that if I can clearly see that the price is being taken down as low as it can possibly go, it's clear to say that there's a lot of people who will take it back up again. So I wouldn't be surprised if we see even higher highs. There are people who I speak to who are convinced this will be the biggest, this bubble's the wrong word, but the biggest wealth creation event that we've seen in history. So so I guess just get in and come along for the journey and see where it goes.
Thank you very much, George. Linda, if you could.
Is Bitcoin near the bottom? I think you can look at, and I have done, and I'm sure we all have done, 20,000 different charts will this week either point out we're at the bottom of a channel, it's a false break, it's the start of a new bull trend. There's a chart that will prove everything. The problem we have with Bitcoin is that if we're looking at a traditional asset, you're going to look at what the company's actually doing, and you're going to look at the technicals as well. With Bitcoin, we don't have that intrinsic value. We can't work out this company is going to expand and build 5 new shops. They've got a new product range coming out. They're building a phone that's better than the iPhone. There's no intrinsics that we can concentrate on. So as a result, a lot of the commentary is about the technicals, but the technicals can prove anything. If you've got a favorite technical person you follow or a system you like, then yeah, go with it, but don't take it as gospel. And the problem is that Bitcoin is still very highly correlated with all the other altcoins. That's because Bitcoin is the biggest player in the market. So everything else is following it because it's the source of liquidity. That high level of correlation is not going to change until Bitcoin is a far smaller part of the overall universe. While it's still the dominant player, everything's going to follow it. That just makes sense. So yes, in the future, say 5–10 years' time, that might be different. But until then, I seriously believe that there is going to be a very, very high level of correlation between Bitcoin and the other altcoins. The other problem with that is the volatility. The volatility is enormous. I mean, if you want to invest in Bitcoin or any other altcoins, you've got to be prepared for the fact that whatever level you invest in, it could go down a long way, it could go up a long way. But you've got to be prepared for those troughs as well as those peaks. In terms of hedging mechanisms, going back to futures, I know quite a lot about derivatives, and I've written quite a lot about Bitcoin futures, actually. When it first came out, I was quite excited to see how it would develop the market. Bringing in a hedging mechanism for any asset, always good, gives investors some variety as to what they can do. But for example, the average person who owns shares in Marks and Spencer's does not hedge it by buying Marks and Spencer's futures. The average Bitcoin investor does not go out and buy Bitcoin futures. Why? Because they're listed on 2 US exchanges, but that's fairly easy to access. But it's the margin cost. There is a huge margin cost. So the amount of initial money you have to give them just to hold the position is very high. That's why it's only the very large institutional investors, hedge funds, who can afford that level of money to put into futures. So I don't think futures is really going to revolutionize the space. So if you can't hedge your Bitcoin or your altcoin holdings by buying futures, you've got to do something else. Okay, you've got a little share portfolio, you've got some Marks and Spencer shares, you've got some Amazon, everyone's got some Apple shares. How do you hedge that? You probably hedge it. Your safety mechanism is probably a deposit account at the bank at the moment. That's probably how you're keeping some of your stable income safe. So if you like, that's the kind of environment that we need to find in the crypto world, somewhere where you can find somewhere safe to put your money, but still have it in cryptos. Because what people want to do is once you've moved things into cryptos, you've bought Bitcoin or you've bought any of the other products in the ICO space, you probably don't want to keep switching it back to fiat. You don't keep wanting to switch it back to sterling at your Lloyd's bank account, back to US dollars at your JP Morgan account. You want to keep it in cryptos, but move it around a little. So that's the exciting area of cryptos now, the fact that there is so much diversity. But the big problem is, obviously, choosing which project to invest in.
Thank you very much. Okay, so what I want to do now, we've got about 10 to 15 minutes left, and I want to get a couple of audience questions. So what I want to ask, if the panel can keep your answers quite short, and if the audience can tailor your questions that people can provide short answers to, that'd be really, really good. So you can put your hands up if anyone's got a question. Take this lady at the front who's the first to have a hand up.
I have 3 questions. First, do you expect to see a regulatory sandbox for cryptocurrencies coming? Second, on hedging, can you just be a little bit more specific about how do you actually hedge? And what would be the advantages of security token capital raising?
Okay, so I think for clarification, one of the questions was how do you actually hedge? The other question, if you could just say again? Regulatory sandbox. And
what's the advantage of using security tokens for capital raising?
So what's the advantage of using utility tokens? Security tokens. Yeah. Okay, so if we can just go through, if you can keep your answers quite short so we can get another couple of questions in. Start with you, David.
Yeah, sure. I'll begin with the security tokens. So if I understand correctly, what is the advantages that security tokens offer issuers or companies as well as to the investors, right? The traditional. Sure. The way I would think about that is that if a security token is issued in a correct, compliant fashion, the investor should have sufficient information as defined by the legal framework in whatever country you live in to take a good decision to invest your money or not. And of course, that decision to invest your money, if it has to do with a startup company, begins with a business proposition, it goes on to the management group, and you can also weave into other decision factors. But in the sense that I'm talking about security tokens, it's very similar to a venture capitalist approaching a new stage company or startup to invest their money in that group of people. There's really not a lot of difference in the sense that I'm talking about security tokens. It's just simply a tokenization of a private company share.
Thank you.
I'll quickly tackle the regulation sandbox one because it's actually something that we've been speaking about. So our acting law firm is Simmons & Simmons in London, and we've been dealing with them now for about a couple of years. And we've had this conversation with Simmons and the FCA. There has been small little sandbox types of projects, but they are now a lot more open to really getting crypto guys in to create a good environment where the right questions could be asked and the right framework could be put into place. However, what I will add to that, however, is right now BitSox is going through our own security token ICO issuance conundrum. And although, yes, I completely agree, frameworks need to be put in place to prevent what happens when human beings get into position of power. We tend to abuse that power, right? So frameworks should get put into place to ensure that that doesn't happen. Completely advocate and support that. But regulation it's not just one layer. There's multiple different layers towards regulation. And we have to be very careful about how close we dance with conformity, because we will lose the thing that's actually got us all in this room right now, which makes cryptocurrencies cryptocurrencies. So yes, regulation, things like sandboxes are good, but really good so people within the crypto community can really speak on behalf of the community and get that message clear and through to the regulators. But the true irony is, if the right frameworks are not put into place, it's not the regulators that will regulate us. Genuinely, we will regulate them. If you truly understand what this technology is, that is what's going to happen. So sandboxes are great ideas.
Okay, well, I'd say that one of the most interesting things about the smart contract world is that the token is the mechanism by which you incentivize the behavior of the token holder. So when it comes to security tokens, I have a little bit of a confusion about them, because as far as I can tell, it's about liquidity. It's about turning your stock into a token that can then move around the world on a blockchain. Whereas a utility token is about getting someone to perform an action to the network of value. So, for example, I might point to one of my favorite projects, which is this decentralized prediction market called Augur, where the machine, you basically make markets on, you can make markets on any question on Earth, and people can come and bet on those markets. That's a collection of smart contracts that's put onto a chain, onto Ethereum. It has no jurisdiction, it has no location. It's completely permissionless and completely sensorless. But the machine doesn't know who won and who lost a market. So what it does is the machine sends out 11 million tokens to the world 3 years ago into the hands of people who participated in that ICO. And their job is to tell the machine the reality. So when the machine goes, hello, who won Oprah Winfrey or Donald Trump? Someone has to tell the machine who won. And the rep token incentivizes you financially to tell the truth, because you get hit very heavily if you don't tell the truth, because the machine has this variance algorithm in it, and if it doesn't like, if you're too far away from the mean answer, well then you get penalized. So what's happening is that I see a specific use for that token. And to come to the regulatory thing, I'm constantly trying to ask myself, how does a system like this work in a regulatory world? I mean, you've no idea who holds the rep token. Anyone with an internet connection can now bet on anything in the world. Every stock market on Earth is going to be mirrored on this platform, and it's completely permissionless, and there's no one to send a cease and desist to. So in terms of regulation, that to me is the biggest question, and I can take that product Augur, that collection of smart contracts, and I can replicate it across every vertical on Earth. I can produce things in the finance space that are doing it, healthcare, insurance, gaming. It doesn't matter what you look at. If you can see some of these smart contract platforms sitting on the Ethereum chain that are building things, sending out tokens to the market, and it's going to be really interesting to see how these two worlds collide.
Thank you.
Regulatory sandboxes, the FCA is pretty advanced on this. We talk to them a lot. So you know, if you're in the UK space, the FCA really are on top of this. They're doing things behind the scene. They're talking to all the key players. My company is actually Swiss, so we're regulated by FINMA, which is the Swiss regulator. So what they've done is they've already classified smart contracts and tokens into 3 categories. They're very clear on what they like. They're very clear on what people can do. If you are looking at investing in any ICO, look first of all what country they're regulated by. There are some which are currently fashionable, if you like. Gibraltar and Estonia in particular are trying very much to encourage crypto businesses in their areas, so they're doing quite a lot. FINMA, I think, have taken a really fair middle line, but all regulators are there to protect investors. So anyone who complains a little bit about we don't want too much regulation, that's fair enough, but I think a minimum level of regulation to protect people is needed. The SEC, of course, have taken their own line, and a lot of people are concerned because they're the biggest regulator in the world, and the most important one, arguably. So as a result of that, that's why there's so much focus on the SEC. But at the moment, I think a good level of regulation, look at where the company is regulated. And if they're regulated in some country you've never heard of, that's got to be your first question. What is the minimum that they are doing? In terms of hedging, Yes, stablecoins obviously is one area. The other thing will be just very much with your own book. When you start having your own tokens, set your own limits very carefully, the same way you do with any other asset. You've got to have a stop level. You know, you've got to get out of positions at where it's below your own comfort threshold, and that will be different for everyone. But utility tokens, have a good look at them. Security tokens, I'm launching one next with FINMA. I've got no concerns about it. It's a nice space to be in.
Thank you very much. We've got some more time for audience questions. I've got a gentleman down here at the front. Quick on the hands. We get just wait for the mic. Bring the mic around. This gentleman here.
I wonder what the panel thinks about Bitcoin forks, or forks in general across all the altcoins.
Okay. Is that question clear?
Yeah, so what the panel thinks about Bitcoin forks. So just to explain, in fact, let me quickly explain two things. I'll explain Bitcoin forks, but the word smart contract's been thrown around quite a lot. It's probably worthwhile just explain what that means a little bit. So smart contracts, to be honest with you, the name's probably wrong. They're not necessarily intelligent or smart. They're just essentially binary functions. Do this if this. In the traditional space, a smart contract would be like a will. You write a will, you give it to your solicitor, do this in the event of this. So smart contracts, if combined with multiple different instructions, you can eventually have all of these different outcomes, and all these systems can communicate with one another. So essentially just automating, taking a human being out of the equation and allowing computers to perform those functions based on the scenarios that are presented. So they're actually pretty simple, and you can do complicated things if you combine a lot of them together. Now, in relation to forks, what that essentially means is in Bitcoin's case, so Bitcoin is a blockchain. What a blockchain means in Bitcoin sense is you have a grouping of transactions that happen every single 10 minutes. So you have 10-minute windows, all the transactions are coupled within that 10-minute window. Block gets stamped, you move on to the next window. And then you have a chain that goes back to essentially Genesis that tracks every single transaction that's ever happened on the network. Now, the way that the rules of the network are changed is through a mechanism of consensus. So there isn't a company, there isn't a corporation, there isn't a centralized actor that has divine right to say we're going down this path or we're going to go down that path. It has to be a community consensus, almost like a digital democracy that decides what direction that we can go in. But as we see in democracy, we don't always agree, right? And then you have these stalemates, and in the corporate space, if you have these stalemates, just say, for instance, you're at a board meeting with your board members, half the board wants the business to go in one direction, the other half of the board wants the business to go in the other direction, and you have essentially a chairman, CEO, who has that arbitrary vote, says, okay, I've heard you both out, however, this is what we're going to do. We don't have that in the crypto space, which is why governance is a big thing right now within the crypto space. So what has happened in Bitcoin's case, and what actually created Bitcoin Cash, is the community, after 2 years of just infighting, could not agree on which direction to take. So the community essentially fractalized, and one half of the community went this direction, that was essentially big blocks, and the other side of the community went in the direction of where Bitcoin is right now, keeping blocks relatively small and building layers on top of the network to achieve ultimately the same goal. There's arguments about how to achieve the same objective. It is actually a part of the consensus mechanism, and this is actually what allows the projects and the software to really grow and thrive, and which is why utility is important, because what will decide who was right is once these projects go out and they build, these engineers are building their own vision and interpretation as to what they believe it to be, it is where we decide where we deploy our capital, which will choose which was the right path. So hard forks are actually quite healthy until it gets to the point where you have to think about, is this almost a case of divide and conquer? Right? So it does get to a point where it can get very out of control, cause a lot of confusion within the space, because most of this room put their hand up at the beginning and said that they're quite new to cryptocurrencies. Well, if I'm now saying there's 2 different versions of Bitcoin, which one do you buy? Right? So that's where
10 versions.
Yeah, 10 versions now. Which one do you buy? So that's where, again, education comes up to the forefront and says, so people know how to make those differentiations and those educated decisions. So for the most part, it's actually relatively healthy, but it does create confusion. You have to be aware as to what the changes are and what was the philosophy behind those changes.
Yeah, I totally agree with all that. I think deep down people need to understand that there are human communities beneath these blockchains, and as human communities disagree, the blockchains will move with those disagreements, and that's healthy. Just to point back to the DAO and a case of Ethereum, where Ethereum split because of a large theft. There was the side of the community that said, no, code is law, let the thief keep their winnings. And then the other side were like, well, actually, you know, we kind of feel that we're early enough in the stage of Ethereum to actually flip the switch and say, this guy can't keep the 60 million quid he's stolen. And the group split, and we have Ethereum Classic. But I think the jury has definitely decided which one is the main one. But I agree it's healthy.
Yeah, I mean, forks are adding liquidity to the system, and they are providing diversity. So that's got to be a good thing because it's growing the whole ecosystem. Beyond that, I have no comment.
Anything else?
Don't have much else to add. I think that was a very good explanation.
So I'll ask a quick question about use of exchanges. So this kind of comes back to the regulatory side, but also the peer-to-peer dealing side. So we have different exchanges coming up. At the moment, we have a lot of centralized exchanges where there's a lot of liquidity and a lot of traditional investing going on, and a lot therefore of regulation possibility. However, in the future, you also have decentralized exchanges that are becoming more popular, so it's a lot more peer-to-peer trading. This is a new thing for the cryptocurrency universe as opposed to the traditional investing system. Do you guys have any thoughts or comments on that, and how you see that going forward as regards to the regulatory side and the personal user experience? Can we start with?
I'll be happy to comment. So this is actually the conversations that we're having at BitStocks right now. And the quite hilarious conversations we're having with our solicitors at Simmons & Simmons is that we are very pro-regulation when it comes to bridging the traditional economic system, fiat currency, government money, with cryptographic Bitcoin and cryptocurrencies. So in that sense, yes, frameworks need to be adhered to, and we advocate them, and we want to help those frameworks be shaped. But then, and that is also in coordination with the conversation we're having about doing our own security token issuance, where we as a company want to be directly responsible for the value that we provide back to our investors, and not just say, okay, give us your money, and then, by the way, let the secondary market do its thing, and good luck, right? Which is how a lot of ICOs have been up until this point. So that's why we didn't go down the utility token route, and we did want to go down the security token route. But the curveball that we swung at Simmons was that, okay, the end of our roadmap, however, is that BitStocks itself will become decentralized. What it is that we are building is a decentralized bank that essentially will be a community service, a community good, where you have a completely verifiable and solvency bank that you can audit and verify everything it is that the company is doing. Where the profit is being derived from, you could contribute to it, you could add business models to the bank as well. Well, that transcends jurisdiction. That supersedes the confines of this geographical location and the currency which defines this geographical location. We are entering now a space where you are having a new district, and that district is completely digital. And it doesn't conform to the traditional mechanisms and traditional market structures. So that is really the answer to where a lot of discussion and thought process is happening right now, that if we do have almost draconian-esque forms of regulation, it's just going to really spur the innovation in that direction. We're doing it not to just circumvent regulators. That's not really our motive. We're doing it because we have to look at what the other component of regulation is and what regulation alienates. In order for any individual in this room to be participants for any one of our businesses on this stage, we need your AML KYC requirements, passport, proof of address. Not an issue for anyone in this room. Of the 7.5 billion people on this planet, 5 billion of which can't provide that information because of where they lay their head at night. They had nothing to do with that thought process. They had nothing to do with that decision. They're just victims of where they were born. So this is what I mean by regulation is multi-layered. So as a business, and looking at this as a truly global currency and building a truly global business, I want to include those 5 billion people. And I want those people to get access to banking products. I want those people to feel genuinely sovereign. So that is where people's ideals, how they wish to reshape society, because we now have the two tools that liberate society, which is the first one being the ring system, which is the internet, which allowed us to communicate on a peer-to-peer basis. And the second one now is the internet of money, which allows us to transact on a peer-to-peer basis. Cryptocurrencies has allowed us to do this. And now society has everything they now need to essentially circumvent any structures. And this is why you're now seeing a rise of decentralized exchanges, decentralized companies, decentralized jurisdictions. It is the next big wave in cryptocurrency, and regulators can't stop it.
I like centralized and decentralized exchanges. There's some great decentralized exchanges coming up at the moment. There's a couple in London, actually, which I think are excellent. We chose to list, first of all, on a centralized exchange because I thought that it was something that investors were comfortable with, that they knew something about. So we went with a large centralized Swiss exchange because we're a Swiss company. Seems to have worked out very well, but we are looking at decentralized exchanges as well, and we look at different exchanges across the world because everyone has a favorite exchange. And half of Asia want all the exchanges that we're listed at to be Asian. At the moment, we're just starting with Switzerland. We'll see how it goes. But we're very open to looking at all exchanges. But I would say as investors, don't always use the same exchange. Split your money up, split your holdings up for security, so that if there is the unfortunate event of a hack on any one exchange, you don't have all your holdings there. In the same way, you wouldn't put all your traditional money with one bank. Don't put all your crypto holdings with one exchange.
I'd add just one point on top of that. Take a look at something called the Gbx Exchange, which is the Gibraltar blockchain exchange. What's slightly unusual about that is that it sits within a government, sort of rubber stamp government framework. So it in theory is one of the first fully government regulated exchanges. It hasn't actually started processing yet, but the reason why I mention it is that the filter process by which tokens are getting listed onto that exchange isn't pay to play by any means. A lot of these exchanges, if you've got the money, you can get on. So if you're new to the space, once Gbx gets fully up and running, you have a very good look at that, because I say only pure quality, but certain attributes have to be in the project to get listed. So as a place to start, that's the place to be. Yeah.
So it's kind of looking after clients before they even start.
Well,
investing.
I mean, so you have to have a sponsor group to even get listed. So to get on, you have to go and find a company like KR1, shameless plug. But there's only three currently companies you can talk to, and my job, or our job as a company, will be to assess every aspect of that project to make sure that it is compliant within the regulations that Gibraltar have set out, and so that you know that if a project is listed on the Gbx, that it has passed through that filter process. And I think decentralized exchanges are very important. They're going to be very, very considerable players in the system. But if you're new to the space, when you press that coin button and you get 3,000 coins that appear, and you're none the wiser, somewhere like the Gbx will perform that role of being like, here's 200, and we know all these 200 have teams, they're proper utility tokens, and they're not just going to perform an exit scam. So there you go.
Thank you. Any other comments on that?
Yeah, so quickly, I think that's a great discussion, some really good advice from my colleagues here. When I think about a centralized exchange, I think about my own fiat-based investments and money that I manage. I typically have them deposited in several different institutions that I know, that I trust, that have a lot of confidence, that I can move my money around, I get a reasonably fair price. If I don't like it, I go to another one. Well, I think that's in large part the way centralized exchanges should work in the crypto space. But I really find fascinating the concept of decentralized exchanges, because as a consumer, as an individual investor myself, what I want is security and transparency of price, and to pay the lowest commission possible, because I don't want to give my money to anybody else to transact, or I want to give as little as possible. And I think that peer-to-peer trading through decentralized exchanges are going down that path, and clearly are going to end up offering some very attractive alternatives. and it's going to bump up into government and regulators, because it's going to be a way, in theory, for me to evade potentially taxes, to manage my wealth, whatever, large or small, outside of the purviews of my local jurisdiction. And so governments and regulators are going to have to adapt to this reality, and I don't know where it's going to end up. It's not the same situation, but I did see how the US government went after Americans that held billions of dollars outside the US and offshore. And they implemented a series of laws, and they went after them, and they got a lot of them, and I'm sure they didn't find all the money. Well, what's going to happen with decentralized exchanges and blockchain technology and everything is going on is getting more and more and more difficult for governments, even one with all the resources that the US has, to track down that money. So it's going to be fascinating to see what happens in the end of the story. And I do think the decentralized exchanges are going to become viable alternatives for consumers once they feel confident that they have safety, transparency in prices, price exploration and execution, and they get what they've agreed to pay and receive back.
Okay, thank you. Unfortunately, we have to wrap it up. We've run out of time. I could spend another hour having a conversation with these people, so please go find them after. They'll be around the show. I'm sure they'll be happy to speak to you if you approach them. Give them all a round of applause. Thank you very much. Okay, welcome everybody. This is a panel on ICO investing, and we have an expert panel here today to tell us all about how to invest in ICOs and what to look for. I'd like to tell you a little bit about myself before we begin. I originally used to work in project engineering, project management in the oil and gas industry in 2013 when I came across Bitcoin, and I've been in love ever since. And so I've been brought on here as part of the STEAM team who are behind the wall here to help Simon and the other organisers of the London Cryptocurrency Show provide a little bit of expertise for the moderation of the panel and hopefully ask the right questions and get the right answers out of these guys. So I just want to introduce the panel. So we've got Shane V. Kehoe, who's over here. He's a co-founder of SVK Crypto. We've got Heron Mayer Jury, who's a blockchain strategy advisor at Jury Capital, who's sitting here to my left, having a good chat. Shane, say hello. Sorry, Heron Mayer?
Yep.
Jeremiah.
There we go. And then Patrick Lowry, CEO of Iconic Lab. And then Liliana Cerevena, of U Global Growth. Yeah? Okay. So if we could just start by the panelists introducing themselves. A couple of them have got a little bit of a presentation to do, and we'll go from there. So if we start with Heron Mayer.
Yeah. Cool. Hello? Yep, cool, no worries. Hi everyone, my name's Heron Mayer. Everyone just calls me H. I am the CEO of Jury Capital Management. So we are we do twofold things. We do end-to-end ICO project management, but we use Prince 2 methodology, which is the UK government's kind of methodology for managing projects. From that perspective there, we've got like, certified project managers, ex-IBM management consultants, kind of just work on our model to constantly refine the process to run an ICO. Secondly, we kind of help out with exchange listings as well. We've got a lot of partnerships with quite larger exchanges to help these companies, once they do go post-ICO, get listed on the exchanges there. I think the three core tenets are kind of my business model there. We don't really focus too much on how much we're raising. We kind of focus more on reputational risk, regulatory compliance, and finally just business longevity to ensure that everyone kind of has a safe journey there. And we're not looking to raise you the most amount of money there. We're looking to raise you an appropriate amount of money, but also have a strong foundation so you can actually run your business model, have a shot of breaking into that emerging technology sector, just so you can work with your models.
Okay.
So my name is Pat Lowry. I'm the CEO of Iconic Lab. We are a Germany-based ICO and token sale accelerator program, as well as a decentralized venture capital club. My background is in financial services. I worked with PwC. I'm actually a CPA from the US. Did the audits of mutual private equity hedge funds, worked with Deutsche Börse's venture capital team after moving to Germany. And that's when I really started getting into blockchain space, because some of the companies that we were looking to invest into, blockchain-oriented companies, that we submitted LOIs, turned around and said, oh, you know what, we're going to do an ICO instead. So that's when I really started taking a look into this space, probably mid to late 2016, because these were not cryptocurrencies, these were not native blockchain protocols, but rather companies that just had a blockchain solution. So when I started diving into this space and noting that there's a propensity that tokenization does have to displace equity as a means of financing for some, not all, early stage ventures, I started working with a few blockchain developers in Berlin to ideate ways we could leverage my investment management background to jump into the crypto space. And what came to fruition was Iconic Lab, where we leverage our backgrounds as VCs and investment managers to identify worthwhile use cases of the blockchain, worthwhile use cases of tokenization, bring them into our accelerator program, provide them that seed financing necessary to cover their ICO-related expenses, and then help them structure their ICO in a completely compliant manner, and then solicit it to our ICNQ club members, which are our own token holders themselves. The ICNQ club allows any of its holders to have access rights, exclusive access rights, to the pre-sales of the companies that graduate our program, as well as the associated bonuses and discounts that come with those pre-sales. We currently have 5 companies in the portfolio. They're actually all here with us today out in the bullpen. You can go take a look at them. And we are scaling in the United States later this year, launching a New York office in May.
Okay, Liliana.
Hi, I'm Lilia Severina. I'm the CEO of U Global Growth. My background is financial technology. I have been involved with digital cash, what it used to be called, and later became blockchain and Bitcoin since the late 90s, I'd say. I do three things. So first, we run a YouTube channel and do training and keep our basically community up to date on where the market is going, what ICOs we consider to be good potential investments, and also, how one could consider running an ICO. So on the training side, I also work with a number of partners on a education coin, which will help people get cheaper access to education, but also be able to control the quality of education you receive. And we also facilitate large peer-to-peer transactions. So if anybody looking to buy large quantities of Bitcoin or Ethereum, then we can facilitate off-exchange high-volume transactions. That's basically what we do.
Thank you, Liliana. Over to Shane.
First of all, thank you all very much for coming. I appreciate you choosing me to speak on the panel today. And very nice to meet the rest of my panel discussion. My name is Shane Kehoe. I am the co-founder of SVK Crypto. SVK Crypto is a London-based fund which invests into very early stage blockchain projects and also existing altcoins. My background, before I started SVK Crypto, I've been a hedge fund manager for one of the largest hedge funds here in London. I manage their equity capital markets business, which is IPOs. So it's nice to be going from initial public offerings to initial coin offerings, is why we are all here today. Apart from managing SVK Crypto, we also give a lot back to the community. We're really focused on our crowd. So we do a daily blog. We're also very active on Twitter. We do a daily podcast. We also host the largest free monthly meetup and cryptocurrency events in the City of London. And also, we're now very active on YouTube. So please hunt me down, use this as a soundboard. If I can do anything for anybody, just reach out to me. We're all about giving back and helping everybody learn. Thank you very much.
Thank you, Shane. So what we're going to do now is I'll ask a question or two to the panel to give a flavour for what we're looking for, and then give you guys something to think about. This panel is fantastic. They know that ICOs like no tomorrow, that like no one else in the industry. And I want you guys to think about some great questions to ask them in terms of getting their knowledge. Right here, we have a great opportunity to find out as much as we can about how to go into ICOs, what to look for, and what these guys know and what they can offer. So without further ado, my first question is the obvious one. Could a couple of you, or maybe all four of you, just go through what you think is the most important thing to look for in an ICO, and what your companies do about setting up a system to either measure that or control that and decide which ICOs you go into?
From this one?
Yeah. Start on the right and move our way.
Yeah, definitely. Yeah, I think it's a two-pronged attack depending on where you're looking at from there. If you're looking from an investor perspective, it's different to kind of what we're looking for from kind of like a company perspective as well. If we are investing in ICOs, for us, there a lot of the times you have to get the basics down in terms of we do look a lot at their regulatory framework just to ensure that how these guys are structuring their token sales, or what they're doing, how their marketing campaigns are put in, how they word their kind of systems, or just to ensure that these guys actually are very well aware of the regulatory kind of rules on how to run their ICO. Because the last thing we need to do is you can end up in there have been a lot of ICOs that have unfortunately been subpoenaed or shut down by governments, such as I think the last one I seen was Centra. They got that was a big ICO. I thought that was very popular. A lot of people got into it there, but then and unfortunately their marketing campaign got them shut down because they misrepresented themselves on the brand itself. From a company perspective, when we invest in ICOs, we take a lot of reputational risk. When we do these there, we put our name on the line. If you put your brand there saying, we invested in this ICO, reputational risk is what I look for from a business and fund perspective. From an investment perspective as well, depending on, because I guess legally you do have to tell everyone there that you are purchasing tokens for future usage on the platform and not expected returns on capital gains by a legal stance. At the same time, we know that investment sentiment is a lot different. A lot of people do purchase it for the latter. But I guess what you're looking for is if you're an investor and you're looking for that capital gains for whatever kind of reason, I guess it does come down to the size of the community and the marketing and the kind of how much hype it does have there. As an investor, that's kind of what I would look for there. Are they oversubscribed? Is there a whitelist that's very hard to get into? Is it popping up everywhere there? Are there kind of big thought leaders or PR or news articles that are really hitting it? Because at that point, once you get that, there's a large amount of demand, like kind of demand and not too much supply. And because of that, you know that people are going to be looking to buy it when they kind of float onto the market.
Okay, thank you.
So from our side, I mean, that's very good if you're looking at this from a short-term investment perspective. You want to look at if there's an oversubscribed whitelist, if they have a huge, massive marketing campaign, and that really drives short-term value to that platform. But at the end of the day, a lot of those people that come into this platform are going to lose a hell of a lot of money. So at Iconic, we look to really drive long-term sustainable value from our companies. So I don't want to give too much away because my presentation later this afternoon is actually how Iconic Lab performs its due diligence and what insights retail and institutional investors can have from our due diligence procedures. But for me, it's about having an actual use case of the chain, actually having a use case of the token, and making sure that business and product exist. That's kind of the floor that you would look at, and make sure that the product is out there, that it's being used in the marketplace, that it's a team